Hello friends, in the YouTube channel Advocate Amit Kumar Gupta. Today we will discuss a very important case which has been decided by the Honorable Supreme Court. The name of the case is Principal Commissioner of Income Tax versus MANSUKH Dyeing and Printing Mills. This case has been reported in 449 ITR at page number 439 and the matter has been decided on 24th November 2022. The analysis of this case somehow gives a message that when some assessee tries to give the color of genuine transaction to some tax evasion activities, then all the assessees has to feel the heat of that. We all know that the assets are revalued in a number of cases. Proprietorship firm also revalues their asset. Partnership firms also revalue their assets. In this particular case, the assessee was a partnership firm. Some new partners were admitted with very low profit sharing ratio. Their capital share was very less. It was ranging near about 2.5 lakh to 4.5 lakh. But the assets were revalued of the partnership firm, and when these assets were revalued, the amount was credited to the partner's capital account, and this amount was running into crores. When this amount was credited to the partner's capital account, after credit into their capital account, some partners also withdrew this amount. The partnership firm must have been some cash-rich partnership firm, because after the revaluation, the partners were in a position to withdraw this amount. The assessing officer said that this revaluation and this crediting and this withdrawal by the partners is covered by section 45 subsection 4, which says that when the partner share will be withdrawn at the dissolution of the firm or otherwise, then it will be treated as a transfer and the capital gain tax will be calculated. Although in this case there was no dissolution. So the assessee was contesting that I am not covered because dissolution word is there in section 45 subsection 4. But the learned assessing officer was emphasizing on the word otherwise. But assessing officer calculated the capital gain tax and taxed the assessee accordingly. The assessee went into the CIT appeal. CIT appeal also upheld the order of the learned assessing officer. The assessee got its case from ITAT and the High Court. So the department was before the Honorable Supreme Court, and the Supreme Court said that this revaluation is very much covered by section 45 subsection 4, and this distribution is covered by the word otherwise, which is appearing in the verbatim of section 45 subsection 4, meaning thereby that dissolution is not necessary and the assessee have to pay the capital gain tax when the assets have been revalued. It has been credited to the partner's capital account. This is the main crux of this case. In this particular case, the facts were a little bit suspicious. So the Honorable Court has very much cautious in making the decision and they taxed the assessee. But the message will go very far that in every revaluation, when the revaluation will be done and the revaluation reserve will be credited to the partner's capital account, then it will be treated transfer according to the section 2 subsection 47 and it will be taxed under section 45 subsection 4. So friends, this case is going to be having very far reaching effect where the revaluation will be done. At the time of revaluation, there is no actual gain to the assessee. But now, as soon as the revaluation will be done, because when the revaluation is done, there is going to be reserve, and this reserve is going to be credited to the partner's capital account or the proprietor capital account. So, with the concept of this or with the ratio of this case, all those cases will be covered where the revaluation is being done. So, this case is having to be very far-reaching effects in the case of revaluation of assets. At the end of this video, once again I am repeating the name of the case. The name of the case is Commissioner of Income Tax versus MANSUKH Dyeing and Printing Mills, and this case has been reported in 449 ITR at page number 439. Thank you, friends.